So, hey, welcome back to Accelerated Real Estate Investor with Josh Cantwell. I'm excited for all of you and for me today. I just did a great interview with Tim Vest, and that's what I'm going to be sharing with you today. Tim is the owner-founder of Harvest Property Group. Tim has 15 years of real estate investing and development experience. He's partnered with various partners to develop raw land. He's done single family homes, fix and flips, multifamily, and hotels. And in this interview, Tim and I are going to talk about a couple of things, which is really great. We're going to talk about, number one, why the smaller properties, the 20 to 40 unit deals, are truly the biggest return on investment and the biggest profitable deals that Tim does. Number two, we're going to talk about why Tim scaled himself out of residential. He hit so many ceilings, so many challenges with scaling residential, the fix and flip business and the rental business, how he just simply scaled himself out of resi and into multifamily. We're going to talk about some of the significant challenges that he faced of switching from resi to multifamily. We're also going to talk about, number four, why just having one or two or three vacancies in your single family portfolio can wipe out an entire year's worth of profits. And we're also going to focus on why Tim is bullish on the student housing market and why he thinks student housing, especially around college towns, especially in the Southeast, why he's bullish on that, why he thinks that's a great play for the next 7 to 10 years. So I think you're going to love this interview with my new friend and CEO of Harvest Property Group. His name is Tim Vest. Here we go.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you're looking to retire early with forever passive income, you're in the right place. This podcast is the go-to destination for real estate investors, both active and passive, and multifamily apartment investors, both new, intermediate, and advanced. Now, sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
Hey, Tim, listen, excited to have you on. Thanks for joining us today on Accelerated Real Estate Investor.
Hey, Josh, thanks for having me on. Glad to be here.
Hey, awesome stuff, Tim. So listen, I know you've been investing in real estate for over 15 years. I'm always curious to see what my guests have on their plate today. What are you working on right now that gets you going? Do you have deals in your pipeline? Something that you're working on that gets you excited? Tell us about that.
Yeah, so got a couple of things that we're closing out right now. We got a 24 unit in Columbia, South Carolina that we're closing out. Closing that on Monday, actually.
Right.
And then we got another 32 unit just outside of Charleston, South Carolina that we close on probably sometime before the 12th of October. So closing those out, capital raise is all done. We're just waiting on the actual closing docs to hit. But man, what's really kind of got me excited right now, I mean, don't get me wrong, I'm excited about those, but what's kind of got me excited right now is we've kind of identified a new little space, a niche little area in the Columbia, South Carolina market, actually, where we're going to be doing some smaller properties with great returns. And what's got me excited about it is I used to do fix and flips for a while, smaller properties, and this is going to let me get my hands back on that a little bit. But this is going to be a little bit more in the college rental space. Which, took a little bit of a hit during COVID, but it's coming back pretty hard. And the outlook in that space over the next 10 years looks pretty phenomenal. So really, really excited about those right now.
Nice. So tell us a little bit about the pivot that you made. You said you were in the fix and flip space. You did that. You guys have obviously done some pretty sizable apartment deals now, and you're continuing to really dig in on that side. How were you able to successfully make the move? Because a lot of our audience is making the move or has made the move or wants to make the move. So specifically talk for a second about your switch from doing resi, doing fix and flips, jumping into apartments. And similar to you, like I like doing big CapEx on apartment deals because of my fix and flip background. I like doing the renovations. I like seeing our team finish renovations and really pushing the rent. So tell us a bit more about that for you, your experience.
Yeah. So, like you said, like that's the piece I really like, man. I really kind of like that hands-on part. Getting in there, every now and then I want to pick up a hammer myself and do something. So, that comes from my fix and flip background, single family rentals. And the way I was able to make that transition, when I got out of that space, kind of made that transition, I was actually trying to figure out where I wanted to go next. So I was looking at self-storage, I was looking at flex industrial, you name it. And what actually kind of dawned on me was, hey, you know what? Apartments is really just single family at a bigger scale. You're still dealing with tenants, you're still dealing with renovation, you're still dealing with value add, and it's just doing it at a bigger scale. So that's the reason, I kind of pivoted into that area, because the reason I got out of single family fix and flips was because of the kind of the inability to scale at a much broader, in a much bigger way. So, for me, it was just kind of like, hey, you're still dealing with tenants. You're just getting more tenants under one roof. So, a lot of the skill sets that I had from the fix and flip single family space just lended itself well there.
Got it. Let's peel back the onion on that a little bit about the challenges, right? So tell me what you were feeling, some of the frustrations and challenges that you were having when you were trying to scale the single family business. And you kind of hit a ceiling, kind of banging your head against the wall as far as just not being able to either find enough deals or raise enough capital or bring in enough contractors. Every deal is kind of different.
Yeah.
Tell us about some of the frustrations you were feeling and ultimately why you exited the single family space.
So kind of started with fix and flips, right? Coming out of 2008, 2009, there was a ton of that, right? For obvious reasons. But so in the fix and flip space, it's awesome. You can make 20, 50, 60, $100,000 in 4 months. The problem with that is that doesn't necessarily create cash flow. It creates a chunk of change at any given time, but you've got to constantly be going for the next one. You better have 2 or 3 going on at any time, and you better have 3 or more coming down the pipe, so that's a constant grind and hustle, which I don't mind grind and hustle, but I also want some sort of passive income coming in at any given time that, hey, if for some reason sellers aren't selling or there's not a flip to be had for a couple of months, you're okay.
Right.
So, that got me into, hey, instead of just flipping all of these, let me find a few and I'm going to rent them. But what I started to learn with single family rentals was 1 month, 2 months of vacancy on a single property that can almost eat away an entire year of profits on that single property. I didn't like that part of it. So I started to look at, how do I scale? How do you scale something like that? And to me, it just kind of made sense of, well, instead of being relying on one tenant under a single roof, what if I had 4 tenants under the same roof? That way I still have cash flow coming in on that one property, even if I lose a tenant or 2.
Right.
It may get lean, but I'm not losing. So, that's part of the reason I started to look at scaling out of that. And it just kind of made sense.
Yeah, it makes sense. I love the multifamily space and the apartment space because vacancy is part of the underwrite, right? It's part of the underwrite. You're like, you're going to be vacant. It's okay. It's part of the business plan. And if we're vacant 5% or 8% or 10%, and even in some cases, when we're doing a big new purchase and a big value add program, we want a bunch of residents to move out. We want the kind of, I mean, I don't know if this is proper to say this, but the deadbeats to move out. Right. And, move out. And we had a property that just went 25% vacant. Now this was only an 80 unit. So we had, roughly 20 vacancies at one time. But we were in the middle of turning all of those at the same time. And now actually, as of the beginning of October coming up here, we're going to be almost at 100% occupancy. We fixed up those 20 units. We did hard turns on all of them and they went right back on the market and leased up over pro forma. And we're good. And that happened for 4 months. Now, if that happened in the resi space, we would be dead meat, right? We'd be bleeding cash. It would hurt bad. We did okay. We were still paying the bills, still paying the pref return to investors, still paying the mortgage. We had IO for the first year, so that's helpful, which especially when you kind of planning on having some vacancy. But again, that stuff doesn't scale in the resi space, right? And if that happens, you're like, oh my God, we're bleeding cash. And Tim, talk for a second too about the scale of multifamily and apartments when it comes to property management and construction and renovation, right? Because again, in resi, you got one contractor that sometimes you feel like that guy can barely handle one rehab, versus in multifamily, you got one contractor that can slam out 5 or 10 units at a time, right? So what's been your experience there?
Yeah, no, I think I see that as well. In fact, I'm dealing with that right now. I got a contractor who, quite frankly, he specializes in heavy lifts. So, but I have a light lift on a single family to duplex conversion that I'm trying to do. And, he wants to charge a premium to do it. In the multifamily space, it's a lot easier for me to say, or my property manager to say, hey, bring your crew in and we're going to do 5 of these things. Mm-hmm. And your crew is going to be here and they're going to be busy for a month. That's what GCs like, right? They want to keep their crews busy, right? So if you can guarantee them, X amount of time with their crew doing this, then they're more likely to prioritize your work over somebody else's. So that's one of the things we see. And then the other thing I just kind of mentioned was sometimes I don't even need the GC. If I got good property management on the property, my property manager is my GC. Mm-hmm. And he just makes sure the subs are there when they're supposed to be and that work's getting done. Obviously I'm doing some overseeing on that as well, but that day to day, is handled by my property manager. So, sometimes I'm able to avoid the GC thing altogether, and we're able to just go, hey, straight to a painting crew and get a painting crew in there and say, hey, I got 5 of these things I need you to knock out this week.
Yeah. Yep. I like it. You hear different opinions about third-party management, right? We did self-management for a while and we've gone third party since then. And I think third-party managers, again, like most businesses, it's the 80-20 rule, like 20% are going to be great. 80% are going to suck, and you want to work with the 20%. I think that's true in most businesses. And third-party property managers, you're right, man. If they can bring some of their own crews, some of their own horsepower, help you with make readies, some of the quarter turns or half turn type of units, and you bring in your own crew for the heavy lift, man, it really works out really well. It's done really well for us. We've actually turned, Tim, in just the last 3 months, we've turned almost 70 units, combination of make ready, hard turns, half turns. I mean, the team is just kicking ass right now, which is awesome.
That's awesome.
I wanted to go back and ask you, you mentioned at the beginning here about smaller properties. A lot of people are like, oh man, I got to do the 100 unit. I got to do the 200 unit. I'm certainly focused on the larger properties too. But you said big returns with smaller properties. Help us understand that. What's unique about that? And what's the return look like? Why is it so appealing?
Yeah. And, that's not blanket across the board. Right. But I tend to do things in the Southeast, and right now, especially for larger properties, we're all dealing with compressing cap rates. I'm in the Charlotte area. I think I saw something the other day. I remember earlier this year, I was looking at Austin, Texas, just because, it was the buzzword. And I was like, oh, what's Austin look like? 2.8% cap rates. And
my God.
I'm like, what?
In my mouth.
But now, like even in the Charlotte area, I saw something the other day go for 3.8. And, when cap rates are compressing like that, or in half compressed like that, cash flow gets really hard.
Right.
And one of the things I'm seeing with some of the smaller properties is, hey, the cash flow is still there. They're not as competitive, especially if you can reposition and maybe see something that somebody else isn't seeing. So, for instance, some of these things that we're seeing with single family to duplex conversions, fourplex, fiveplex, we're able to go in and we're able to create right from day one. We're able to create 16-17% cash on cash returns. And we're doing a fiveplex right now that once we get it through the renovation and leased up, we're going to be doing 22% cash on cash. And we'll be able to return. We have one investor. We'll be able to return his capital to him within 18 months. And within 5 years, we're projecting a 4x on the equity multiple on that thing.
Nice.
Which, it's not 100 units, But that investor, man, he's going to be happy. And quite frankly, to me and my business partner, it's a solid return. I mean, it's definitely worth our time to do.
Right.
So I don't necessarily look at it. I don't want to do a ton of that, right? Because like I said, I got out of the single family business for a reason, but I'm doing 6 of these all within a mile of each other.
Yeah.
So I'm able to put property management on it. And I'm able to, it's in an area where we have a backlog of tenants already. So my vacancy, you talk about underwriting in the vacancy, my vacancy rate is literally 1% because it's just the amount of time it takes me to get the tenant out, repaint it, put a new tenant in, which is like 4 days.
Yeah.
So, it's literally like 1%. And, it's just a really good niche. So when I find a niche like that, I will go for it. But the bread and butter, the large majority of the portfolio is we target 20 and up,
Mhm.
20 plus.
Mm-hmm. Yeah, I mean we've done the same thing. I mean we have huge complexes, and we've got some smaller stuff. We got a 16 unit. We have a 5 unit that we just sold. Now our focus is really similar, like 50 units and up. But I could tell you on those 50 units, sometimes those are just slam dunk deals, and the spreads are bigger.
Yeah.
It makes just as much sense to buy a 50 unit as a 150 unit for the amount of work, time, effort, and the spreads are bigger, right? The cap rate spread between what we bought at and what it's going to be worth
Right.
is like 2 or 3 point difference, right? And it allows us to have a significant amount of equity appreciation for a much smaller lift, a lot less risk for everybody. So we're definitely not going to shy away from those deals. Not at all.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast.
So Tim, when you got started with real estate and got your first deal kind of going even in the resi space, I'm curious to know, like, what were some early challenges that you had, right? Because we've got people on this podcast, this audience, that have never done a deal. And then we've got guys that have done lots of resi deals, pivoting and scaling into multifamily. But what were some of the early challenges that you faced when you first got started in real estate? And then some early challenges that you faced when you were making the transition to multifamily?
So biggest challenge I faced when I first got into real estate for me was lending. I didn't have a track record. So banks didn't want to lend. Unless I was able to come up with significant cash out of pocket, which quite frankly, when I got into single family and fix and flips, I was coming out of my first foray into real estate, which was land development in 2006 and 7, which went really well and then really bad.
Right. Sure.
So I didn't have a lot of cash when I started doing the single family and the fix and flip stuff. So lending was tough. But I was able to get through that by just kind of keeping my head down and just continuing to make lending relationships. And, all it took was one. I just had to find that one lender that was willing to go, I'll give you a shot.
Mm-hmm.
So, once I got that taken care of, it all kind of flowed from there. Because I grew up building decks with my dad, man. I grew up we built our own house when I was a kid that I grew up in. So I knew how to build. I knew how to do construction. I knew how to manage GCs. That part, not a problem. It was just getting that lending piece. And then the second part of the question, when I transitioned into multifamily, I was like, I want to scale. But the thing that really helped me scale was it was partnerships.
Mm-hmm.
Like one of the biggest things in multifamily that I see, and this is a mistake quite frankly, in my opinion, it's a mistake I see some people make when they first get in, is they want to do things themselves. They want it all. And, I quickly started to realize, what, I'd rather have 10% with a partner than all of basically what ends up being all or nothing. So, partnerships for me were the biggest lessons learned when I got into multifamily is they're critical. They're absolutely critical.
Yeah. What suggestions would you give our audience regarding making joint venture partnerships? Like, where are places to go to meet people? What are maybe some questions to ask or ways to kind of feel yourself through a new partnership? We've obviously we've done lots of partnership deals. You have, so have I. It's worked well. What are your thoughts on building new partnerships and making new relationships?
Outside of your like immediate network of people you've known yourself for a while, for me, it really came down to I looked at it as an investment in myself and an investment in my business. I went after strategic, we all call them masterminds. I went after a couple of strategic masterminds that I looked at for specific reasons. And through those masterminds, I found a couple of people that had similar goals, were at similar places in life, who brought complementary skill sets. And after a while of getting to know them, created some partnerships that way. And that's probably been the most successful way I've created a partnership is through those mastermind groups. A lot of people look at mastermind groups as a way to get mentoring, and it's absolutely there for that. But to me, the networking and the partnership that comes out of those masterminds, or at least a good one, to me, that's where the real value is.
I agree. I think a lot of guys, it's interesting. I'm in some Facebook groups that I've been in forever and I've outgrown most of them, but I still see them. They pop up. Facebook's really good at making the phone ding and, hey, you got this notification. Hey, this person made a post. So I look at it. It's interesting to see people who are like wholesaling who want partners. I'm like, you don't need a partner to wholesale a house and make $5,000. I mean, come on. And again, a lot of that stuff doesn't necessarily stick, right? The social media connections, the Facebook groups, the LinkedIn groups, they're great. But it's best to take that, I agree with you, Tim, to the next level, which is go attend a live event, or even the next level, which is go pony up some dough and go jump into a mastermind. I mean, some of my best relationships I have today are from masterminds I was in 10 years ago. And I still do deals with those guys. And even my own mastermind that I run with my members, I'm a conduit. I'm an ecosystem for them to meet and do deals with each other. And it's a place where people can build trust, right? That's the biggest thing is trust, having some pops with somebody, having a couple beers, learning what people like and what they're up to. In that environment is a lot different than a connection on social media. So I think that's a lesson and definitely a good piece of advice for all of our audience. Just make that next step, right? If you're real serious, pony up a few bucks, jump into mastermind and make the relationships. Tim and I had very similar experiences with that. So Tim, what kind of advice, now looking back at your story and your path, what do you think you did well? Like if you were talking to your younger former self or our audience and said, like, here's some things I did well that I would redo. And then here's some things that, man, these are some lessons I learned that I wish I would have never done. Some things I would go back and punch my younger former self in the face and say, don't do this. What are some of the lessons that you learned along the way?
Yeah. So something that I did well, that I would go back and say, do better, or take action. That's the biggest thing. That's one of the things that I wish I could go back and tell 20-year-old me, 18-year-old me, don't wait. Like don't wait someday, don't wait till tomorrow, whatever. Just take some action. Even if it's a really, really small step, take a step. And that's something I think I did well. I just waited longer than I should have to do it. Because and looking back on it, I'm like, well, why not? Well, one, at first I thought you needed all these things to fall in place before you could do something, rather than doing something to make those things fall in place.
I was going to say fall in place as you do it, right?
Right.
Don't put them all together and be like, okay, I'm ready to start. It's you start and then things start to fall into place. And all of a sudden you're like, holy shit, close that deal. It all came together.
Yeah.
It worked.
Yeah. And part of some of that's confidence, right? Like, and that's one of the things that I got out of mentorship and masterminds and stuff is that confidence that, hey, get it under contract and you'll figure it out. Like just, surround yourself with people that can help you and advise you, but you'll figure it out. And quite frankly, there's no motivation like having something under contract and knowing you got 30 days to make it work.
Right.
Um, but some of that comes with just being like, what, if I fell, I fell, whatever, at least I'm going to learn something. So taking action, that would be one of the things I would go back and tell younger self, hey, do that I actually did later that I think I've been good at. And then, lesson learned, I would say never put yourself in a position where you have one way out, one exit. When I first got into real estate, it was 2006. It was in land development. We were taking raw land, working with a developer to get it to a point where it was ready to be developed with the general market. So getting infrastructure in place. And there was only one way out in that, and that was to make sure that the developer that we were partnered with was able to complete that infrastructure piece. If they didn't, then you were left with basically land that you overpaid for with a bunch of trees on it that may or may not have roads to access it. And when 2008 came around and the market crashed like it did, our developers went belly up and we were left with that kind of land. So doing things where you only have one way out, and you're solely dependent on somebody to deliver. I don't do deals like that anymore.
That's great advice. That's great advice, Tim. Thanks for that. Yeah, I agree, man. If there's anything that 2008 through 2010 taught us that we can't repeat now, is exactly that, having ways to get out of deals, refinance, new construction, that type of stuff. It's got to be done at the right time. It's got to be done as the market's expanding, not when the real market's like super mature, right? And the market's really mature right now. And we all know that these things go in cycles. We all know that central bankers make and break markets. And if the central bankers pull back on lending or pull back on, and like I said, look, Lehman Brothers took down most of the world, right? And are talking about now about this Evergrande, right, in China being their Lehman moment.
Yeah.
Does that make me nervous? Not super, but I'm also not dumb. Like I remember Lehman, I remember that. It was only 12 years ago.
Yeah.
13 years ago. So let's not be stupid. We've got to be smart about how we're investing. So yeah, I love deals where we've got permanent financing on them. We can refi if we need to, if we want to, but we're not going to lose the asset, right? Because the note gets called due at the wrong time.
Right.
That's a big, big mistake. So I appreciate you sharing that.
In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time, and you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast.
So Tim, let's wrap up with our final 5. You ready for these?
I think so.
5 quick questions, 5 quick answers. Of course, our audience loves to hear this, the favorite part of the episode. Let's start with number 1, Tim. What's your favorite way to get and find new deals?
Favorite way to get and find new deals is just basically through networking. Having coffee with people, calling people, getting on the phone, whether that be brokers, direct to sellers, or just other guys doing what we do who have something that they're ready to move on from.
Got it. Love it. How about your favorite way to find capital for your capital stack?
Networking.
Right.
Networking. I getting on the phone, talking with people, just networking.
Got it. Love it. Tim, every CEO, every busy entrepreneur needs a place to go to get away from their business. You and I were talking about working out earlier before the podcast started. I'm curious, what's your favorite way to decompress, get away from life, get away from your business, and kind of let your mind just free float? For me, that's when I get my best ideas, is when I'm actually not thinking about work, is usually when I get my best ideas about work. So I'm curious, where do you go to decompress and think?
Yeah, so you mentioned it actually. Even if I go to the Caribbean or the Hawaii or something, I'm working. I can't turn my brain off when I'm doing that. It's when I'm working out. It's when I'm working out or going for a run. In fact, I think I solved most of my business issues, and I'll head out for a run without work on my mind. And while I'm out there, something just pops up, and I'm like, yeah.
I love it. I think it was Bill Phillips. I've referenced this many times, that once said, the founder of, Body for Life and in EAS Sports Nutrition, who said, I never got a great idea by actually thinking about it.
No.
Right. It's just got into the joy of my day. I got into the joy of life. I was working out. I was hanging out with my friends, and it just popped into my head. And there it was. No rhyme or reason why it showed up, but it did. And so I like to encourage my audience to not work, right, all the time. Certainly there's a time to sprint, but there's the time when you need to think, is usually enjoying life, going out with friends, doing social things. That's why I've given myself the permission, Tim. I think a lot of people need to give themselves permission to go have more fun, to do more social things, to spend more time on their health, because that is a way to improve your business, right?
Yeah.
I love it. Tim, what do you think is the best piece of advice that you've ever been given?
Best piece of advice. We actually touched on it a few minutes ago. Take action. Don't sit around waiting for perfect. Just take action. Do something every day, no matter how small it is. Do something.
Love it. Don't sit around waiting for perfect. I'm going to steal that. That was brilliant.
I think I did. So feel free.
I love it. That was great. Pass that along. Right. And Tim, what do you think is for you? Who do you think's been the mentor that's maybe had the biggest impact on your life? You mentioned mastermind, you mentioned coaching programs, you mentioned networking, or all ways to build yourself, as well as, your experience, your self-confidence. But oftentimes there's some, one mentor. My best mentor I ever had was my father. Is, I guess, very typical, but my dad was an entrepreneur. He had the guts, the stones to start a family business when we were probably in our worst financial situation we'd ever been in. My dad, shortly after filing for bankruptcy, became an entrepreneur, became wildly successful. But what about for you, Tim? Who's been the mentor that's had the biggest impact on your life, and why?
Hey, I know this is going to sound like I stole it, but it's my dad. My company's named after him. His name was Harold Best, so it's Harvest. But my dad, he did some entrepreneurial stuff. He was a go-doer, a go-getter. He was always finding ways to like create extra income for our family. And then, he was always one of those guys, like when it was like, Dad, I need the oil changed in my car. He'd throw me an oil filter and a wrench and be like, well, go do it, And so, and he'd wait till I was like pretty close to messing something up before he'd come help me and teach me how to do it. But, his biggest thing was, man, you want to learn how to do something, go do it, that was probably one of the biggest things I took from him. And that's just how he was. So I'd have to say my dad.
I love it. Now, Tim, I know your main website is harvestpg.com, which is harvestpg as in propertygroup.com. It's obviously a great place for my audience to go to check out Tim and his website. Where else can our audience get more information about you?
Yeah, so I'm on Facebook, and then on LinkedIn, I'm on there quite a bit. But then, in any of those cases, just reach out to me if you ever want to learn about me or you just want to chat about something. Feel free to reach out. I'm always happy to talk about this kind of stuff or experiences, or I'd love to hear about yours. I learn as much from talking to other people, man.
Love it. There you go. Facebook, LinkedIn, harvestpg.com. There you can get more information about Tim, his investment opportunities, and of course, like Tim said, network, and go from there. So Tim, listen, thanks so much for carving out some time today and jumping on the show.
Yeah, Josh, I appreciate it, man. Thanks for having me on.
Well, hey guys, listen, I hope you enjoyed that interview with Tim. I had a blast getting to know him and interviewing him for the show. Don't forget to subscribe. Hit the subscribe button. Open up your phone right now, whether you're on Android or Apple. Go ahead, open up your phone. Hit the subscribe button, tap the 5-star review button, and don't forget to write a review. Also, don't forget to subscribe to the show on YouTube. Today, I'm actually looking a little rough, so this video might be a little rough on YouTube. But, I got up, I worked out. I've been underwriting deals all morning, did a couple of investor interviews, and jumped on the podcast. I've yet to take a shower. That's all right, because we're busy, we're making money, we're having fun. It's all good. I'll get a shower later on today. Hope you enjoyed the show today, guys. Don't forget to subscribe, leave us a 5-star rating and review, and we'll see you next time on Accelerated Real Estate Investor.
Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You were just listening to the Accelerated Investor Podcast with Josh Cantwell. If you enjoyed this episode and learned something new, help us build the AI community by leaving a review and 5-star rating on our iTunes podcast channel. Also, don't forget to subscribe so you never miss another episode. To see passive investing opportunities, visit freelandventures.com/passive. To start your journey toward the lifestyle you've always dreamed of with multifamily apartments, apply for one-on-one coaching with Josh at www.joshcantwellcoaching.com.